Hi guys, Will here from WB Trading and welcome back. So we are back here on the gold market today, and just before we do dive in and get started with the video, if you are struggling with your trading and or you've been thinking of working with me and my team, I've put a book a call link in the description where you can actually book in a call with me to see if our program, if working with us, trading using mechanical rules would actually be right for you. So that's there if you need it. But that aside, we're looking at a higher time frame bias edge setup on screen here at the moment. And just to kind of explain what I'm actually doing here. So for those of you who don't know this already, as a mechanical trader, what I have is a set of rules that I follow that I use to actually trade. Okay, so the first thing that I've done here is actually sit down at a specific time of the day to look at a set of specific markets. Okay, one of the markets being gold. And what I'm looking for is my first rule to actually be met, which in the case of our higher time frame bias edge, it's a specific candle of a specific size at a specific time, right? And that's what we have here on gold as you can actually see. So let me get this opened up and we'll take this trade together whilst I actually walk you through the process. Now, the rules are pretty simple, so let me walk you through them step by step here. So firstly, let me just get this into perspective. And the first thing that we want to do is take a look at where the first rule is actually telling us to get in, or in other words, where our entry trigger will be, where we'll actually be buying the market in this case. So let me get this mapped very quickly. So bear with me here whilst I get this marked on, and we can go from there. There we go. So our entry trigger is 1787 spot 9. Perfect. So now we move on to the next rule, which is to place a buy order at that specific price. So again, 1787 spot 9. And then the next rule of the edge is to place a stop loss 1 point below the low of the candle. So again, that's 1 point. So we're told exactly where to place that. There we go. And the final rule of the edge is to place a profit target up at the candle body high. There we go. Okay, so that's that done. That's it. So let me get this sized correctly and we'll actually get this in. And what I'm doing here is placing my maximum risk, so the amount of money that I'm wanting to risk on this specific trade within my stop loss. Okay, so that's what I'm doing here on the ticket. Let me get that mapped. All right, there we go. So that is the order placed. Let me get this taken off, get this into perspective so that we can all see it properly. Right, perfect, great. Okay, so there we go. So pretty simple stuff. I mean, how long did that take? 90 seconds, 2 minutes. I mean, believe it or not, that's now us done via this market. So just to recap the rules here, rule number 1, identify the specific candle at the specific time of day on the specific market. Rule number 2, mark the entry trigger. Rule number 3, place a stop loss 1 point either below the low if buying or above the high of the candle if selling. Okay. And rule number 4, place a profit target at the candle body high. And rule number 5, just walk away. Leave the damn trade alone. Okay. And see, if anything, that last rule is the most important rule, because by walking away, we're actually removing the self-sabotage altogether. We aren't falling foul to the, exiting early due to fear, exiting late due to greed, moving our stop loss to break even, and then getting taken out at break even, scaling it all out. None of it. We just follow the rules inside of a couple of minutes and done. Just go away and leave the trade to do its thing. That's the power of mechanical trading, in that it removes those stumbling blocks entirely. And hey, maybe you the person watching this video today, maybe you've been there, right? And you've fallen into those emotion-based traps, the self-sabotage, the doubt, the stress caused by not having a process, a framework, clear rules to follow to keep you on track. And again, if that is the case, if you are still struggling with your trading and or you've been thinking of working with me, working with my team, then again, I've put a book a call link in the description where you can actually book in a call with me. We'll sit down together to see if our program, if trading using mechanical rules would actually be right for you. Anyway, that's there if you need it, of course. And just to give you an example of someone who actually did just that, who did book a call with me and joined our program and achieved the results, who completely removed the emotion, the self-sabotage. Have a look at this message from one of our newer clients, Patricia. So as she says herself, I set the trades today using the rules on the Germany 30 market and the pound dollar market, and both freaking hit target. I love it. Germany 30 brought in $1,100 and the pound dollar market brought in $750. I mean, imagine that for a second. Imagine following a set of rules and banking $1,850 in a single day by, again, literally following the rules and just walking away, or going back to bed in Patricia's case. And she then goes on to say, I love that there are strict rules in place like this. So no guessing, just execute and then go back to bed. That speaks for itself, doesn't it? I mean, how would that impact your trading? Zero analysis, no hours sat staring at the charts all day, every day, 5 days a week. Just come in at X time, do Y, go away. Let your edge do its thing. Anyway, that aside, nothing else to do here other than sit on our hands and let our edge play out. So let me leave this alone for now, and I'll be back with an update later on. Back soon. Right guys, just back, and as you can see, so price has come down to our order, filled us long, and more or less started to just head straight back upwards and straight into profit for us, which is always a good sign. And one thing I want you to notice here is, most importantly, the size of our risk compared to our reward. Okay, so in this case, we're risking 1 to make 3.4 back, or in other words, we're risking, let's say, $1,000, and we're aiming to make back $3,400. Okay, see, this is where most traders get it wrong. Not only do they not have, a process, a framework, rules to keep them on track, but in many cases, they actually have no idea where to accurately place a stop loss or a take profit either. For most traders out there, if they truly be honest with themselves, they don't have an edge over the market, and they know deep down they are gambling, right? And we all know what happens to people who gamble, don't we? In the end, they lose everything, just like a punter in a casino, right? The financial markets are no place for gamblers, and when you don't have a framework, the losses can not only be huge, they can be pretty disastrous. Whereas with an edge, with a mechanical process in place, when we lose, we only ever lose small, and when we win, we either win, small or very, very large. Okay, and that's providing our edge over the market. See, this trade could be a loss, right? I'm open to that. Now, yes, it will annoy me in the short term, because who likes losing? No one, right? But over the long term, I actually know as a proven mathematical fact, absolute statistical fact, that I will come out ahead, because my wins outsize my losses in line with my win rates, right? The question is, do you have a proven edge? I mean, do you know for absolute fact, proven by statistics, that you will come out ahead of the markets? If yes, then brilliant. Keep doing what you're doing. If no, then really you should not be trading. You should pause your trading immediately and get an edge over the market. And again, if you do need help with that, I've put that book a call link in the description where you can book in a call with me and we'll talk that over. Right, that's there if you need it. But again, let me just leave this alone for now. Let this trade play out. And again, I'll come back to you with an update in 1-2 days time. Back soon. Okay, so just back, and wow, have we seen price ramp up today. So fast on the way to target, not there by any means, but looking really good on this trade at the moment, that's for sure. Anyway, just a very quick update on this, and as you can see, this is a daily chart that we're using here, so likely still in for a 1-2 day wait, I dare say, on this. So again, let me leave this alone for now, and I'll come back with an update shortly. All right, just back, and this has never happened to me before, ever. So for those who know me personally, you'll know I've just moved into a new apartment. I've been, ultra busy over the last few days, and a friend of mine who knew I was taking this trade told me, and I was stupid enough to not even check, that this trade had actually been stocked out. So I didn't even check the chart due to the move. I just kind of mentally wrote this off as a loss. And I've literally just come back in now to find that actually this has got to target in the end. Chris, you're an absolute bugger, that's for sure. He will be laughing when he watches this anyway. So just to recap this, let's get the entry on. So that was, what was it? It was 1787 spot 9. Okay. Stop loss was 1775 spot 6. And the target in this case was 1829 spot 5, wasn't it? For a total of 3.4R. So just slightly above. So that's the target hit for £1,252 and 46 pence added to the bank balance, and 3.4R in the bag. So again, we risked 1 to make 3.4 back. Really, really solid. Anyway, hopefully you enjoyed taking a look inside the strategy today. Again, that book a call link is there at the top of the description for you if you need it. And yeah, I'll see you back here next time. Bye for now.